Thank you, listeners, for joining us today on Ask the Expert. My name is Nathan McDonald of Sprott Money News, and we are very excited to have the pleasure of speaking with James Turk this morning. James Turk is the founder of Gold Money, based on digital gold currency, for which he was awarded 4 patents. He has specialized in international banking, finance, and investments. James Turk has written several monographs and numerous articles on money and banking, much of which can be found on his free Gold Money Report website, www.fgmr.com. With this, I am pleased to welcome James Turk this morning. Hello, James.
Hi, Nathan. Good to speak with you.
James, recently, the CFTC concluded a 5-year investigation into the manipulation of the silver market by JP Morgan Chase. It was concluded by the CFTC that there was no clear evidence of manipulation. This decision comes in spite of ample evidence, which was provided by Andrew Maguire, Ted Butler, and 2 whistleblowers who formerly worked with JP Morgan Chase. Why do you believe they reached this decision and did not act on the evidence provided?
Well, I think the CFTC was following orders from above. And the orders from above came down that, yes, there's been interventions in the gold market and the market is being manipulated, but it's being done by the bank for its client being the U.S. government and more specifically the Exchange Stabilization Fund. So I think essentially the CFTC bowed to a higher authority. But more generally, you have to really look at what's going on in Washington, D.C. these days. And not just with the CFTC, but, generally, with a lot of these regulatory and bureaucratic organizations whose interests are really being served. Is it Wall Street's interests or is it Main Street's interests? I think this is just another evidence that in this particular case, Wall Street's interests have been put over Main Street's interests, which is unfortunate, but, that's the reality of the world in which we live today.
So do you believe that the CFT is compromised? Do you believe that it's basically bought and paid for?
Well, I wouldn't necessarily say that. I would say they are compromised in the sense that they do have a higher authority. Even if you look at, the staffing, instead of having, say, a soybean farmer from Illinois as the chairman of the CFTC, they have a Wall Streeter as chairman of the CFTC. So, they will do the government's bidding, whatever that bidding happens to be.
Everything, it just seems to fall into place for the banks that are manipulating the market, mainly because there's no action being taken against them. The next question, James, is from a few of our readers have this question. Most experts agree that the physical markets will eventually overwhelm the paper market. But in light of the CFTC's decisions to not prosecute those manipulating the price of precious metals, what is to stop the likes of JP Morgan and others from holding the price lower indefinitely?
Well, that's a really good question. And that's a question we used to see a lot back in the 1960s. When the governments back then were manipulating the gold price to try to make the market believe that gold was only worth $35 an ounce, when everybody who understood gold knew that it was worth more than $35 per ounce. What happened back in the 1960s is eventually, governments threw in the towel. There was 12,000 tons of gold dishoarded from Fort Knox officially. There may have been even more done unofficially. We don't know because there's never been an outside audit of Fort Knox since the 1950s. But the point I'm making is that the market is bigger than any government or group of governments. And when something is undervalued, or conversely, when something is overvalued, the market doesn't like it. And the market will respond accordingly. And what we've seen over the past few months, particularly, is this huge demand for physical gold, wave of buying because price is so cheap. Here at $1,270 an ounce, just like gold was cheap at $35 an ounce back in the 1960s. It's taking time, more time than I thought it would take. But that's the thing about markets. You can sort of forecast which way the market is heading, and you can determine which assets are overvalued or undervalued, but you can never predict the timing of these things, and what markets require is patience. But as long as you're acquiring an undervalued asset, you should be patient and hope that, eventually the market will return to a free market environment without concerted government intervention trying to cap the gold price and trying to deny the reality of the situation that gold is very undervalued at these levels. There's a bigger issue here too, Nathan. Gold has been money for 5,000 years. It didn't stop being money in 1971. It stopped circulating as currency in 1971, but it's still money because it's useful in economic calculation. In other words, it's still useful to measure the price of goods and services with gold to determine what's truly happening. An ounce of gold still buys the same amount of crude oil it did 60 years ago. You can't say that for the dollar or any other national currency, which are constantly being debased. So even though gold doesn't circulate as currency anymore, except in a few places like Turkey and Vietnam and parts of the Middle East, it's still money, and it's still useful for that reason. And eventually the manipulation and capping of the gold price will be overwhelmed, just like it was back in the 1960s when the London gold pool fell apart in March of 1968.
So something I often tell my listeners and readers is that they need to stop stressing so much about the nominal price of gold and silver, and they need to start considering their wealth in ounces of real money.
I think that's a very good strategy, because when all of this is said and done at the end, you're going to be counting wealth in terms of ounces and grams. And therefore, accumulating physical gold and physical silver is, I think, the ideal strategy, given the fact that the assets are so undervalued and given all of the problems we have with the monetary system worldwide. It's not just the dollar that's in trouble, but it's the British pound, the Japanese yen, the euro, and pretty much every other currency around the world. And when you have currency turmoil, all you have to do is look at monetary history and conclude that, yes, gold and silver, physical gold and physical silver are the place to be to provide that safe haven from that monetary turmoil. And they are a safe haven because, in contrast to the national currencies, which are just a bookkeeping entry based on some banks or some government's promise, physical gold and physical silver, the value of them are, first of all, they're tangible assets and they don't have counterparty risk. And the value of them derives from the preponderance of people around the world who understand gold and silver's usefulness as money.
The Fed recently announced that they won't be tapering in the near future. This came as a shock to many in the broad investment community, but not so much for those in the precious metals community. Do you believe that the Fed has gone too far down the rabbit hole? Do you believe that will they ever be able to taper?
Yeah, I've been of the view that they're not going to taper. And the reason is that once you get on this treadmill or down the rabbit hole, you're stuck. It takes a real leader to say that we went the wrong direction and we're going to stop and go back the other direction. This is the exact same thing that happened in Weimar Germany in the 1920s. The German Reichsbank was buying government paper in Germany and turning that into currency. It's the exact same thing that happened in Zimbabwe, a few years ago. It's the exact same thing that happened in Argentina. The government, the central bank that was buying Argentine government paper and turning it into currency. And that's what QE is all about. It's turning government debt into currency. And ultimately it leads to the destruction of the currency. So I really don't think they're ever going to taper. And the Fed will continue to do what they've done very effectively, for a long time. They're going to just propagandize, that they're going to protect the purchasing power of the dollar, but they never do. The Fed has lost, since the Fed was established 100 years ago, the purchasing power of the dollar has gone down by various estimates, 97 or 98%. And it's going to continue to go down. And the only way to protect yourself against that is to own physical gold and physical silver and any other tangible asset that represents real wealth.
Holding fiat dollars basically is a bad idea in this market.
Yeah, it is a bad idea. Unfortunately, because of government legislation and various legal tender laws, everybody to a certain extent has to hold some national currency, because some bills have to be paid in the national currency in the country where you live. So you cannot avoid national currencies, but you don't have to keep much of your liquidity, the liquid part of your wealth. You don't have to keep much of that, your monetary needs, in a national currency. You're better off keeping the liquid part of your wealth in a precious metal than you are in any of the dollars. But, this relates to, is your objective short term or long term? From a short-term point of view, holding gold and silver may not look like the best alternative because you do get movements of its price down as well as up for that matter. And that volatility can upset people in terms of what their requirements are for, living expenses from, month to month. But from a long-term point of view, you're much better off owning any precious metal than you are owning any national currency because you don't earn enough interest income on national currencies to offset the risks of holding them, to maintain your purchasing power in that national currency, or to overcome the counterparty risk that you have that, your bank might ultimately go under. And just like happened in Cyprus earlier this year, you might lose 40, 50, 60% of your money in a bank bail-in.
That's right, James. So since the Cyprus bail-ins have become a serious risk that I think everybody needs to be aware of, especially since it's been added to legislation in Canadian bills and laws, and it looks like the Western world is going that direction. Do you believe that your money is safe in the bank? Is the bank a good place to keep your precious metals? If not, where would you keep your money?
Well, there are a couple of questions there. First of all, money in banks is not safe. I would not keep any precious metals in a bank, first of all. Keep your precious metals in a non-bank depository. There are a number of vaulting companies around the world. We at GoldMoney use 4 different vaulting companies. Viamat, which is a Swiss company, Brinks, which is a U.S. company. We use Brinks in Canada. We use Melka Amet in Asia, and we also use G4S, which is a British company. We use their vaults in Asia as well. None of these companies are in the business of lending like banks. They're all in the business of storing. The aim of banks is to keep their vaults empty because they're in the business of lending. They're not really in the business of storing. They make more business by lending gold than they do storing gold. So don't keep your gold in a bank. And as for currencies, just like I was saying before, in the short term, to a certain extent, we're reliant upon the banking system and having to use some national currencies to pay bills. But, I would keep that to a minimum because at any moment in time, your bank, which you think might be safe, may in fact not be safe.
Another hot topic right now, James, is going to affect everything if the government doesn't figure it out soon, is the United States government. They're in a partial shutdown right now, as we know, and they're facing a possible default if the debt ceiling is not raised by October 17th. Do you believe this is simply more government theater, or do you see a real possibility of default? If so, what are the ramifications, and what would these ramifications be for the world economy?
Well, there is a lot of theater there. First of all, the government has defaulted several times before. It defaulted in 1933 when it refused to honor its debts by paying in gold. It defaulted in 1965 when it took silver out of the monetary system. And it's basically been defaulting all along by allowing the dollar's purchasing power to be eroded through inflation and debasement year after year after year. So given the fact that they've defaulted so many times before, can they default this time? Yeah, sure they can. And, it won't mean anything to the politicians, but it's going to mean a lot to anybody who has debt with the U.S. government. It's always sort of amazed me that, after the government takes 30 to 40% in taxes of what you earn, why you would ever lend money back to the government with the rest of it. Because once you lend it to them, they're in control, you're not in control. And this is a good example of that adage. The government is in control of the situation. If they default, they might say, well, we will pay everybody who has a $10,000 T-bill, but we're not going to pay individuals who have $1 million T-bill because they can afford a loss of $1 million where somebody with only 10,000 may not be able to afford a loss. They can do all kinds of crazy things like that. The reality is that they don't have to default. They can prioritize their bills. They get money coming in all of the time for taxes, so they can use that money to pay interest on the T-bills and T-bonds that the government owes. So there's a lot of theater in claiming that there's going to be a default on October 17th. It doesn't have to be that way. I think the ramifications to the world is really a key question here, though, because it's just part of the erosion of American credibility in the rest of the world. Everybody outside the United States, and I think a growing number of people in the United States, recognize that the U.S. is on the wrong path, that what has been happening to the dollar and the continual increases in the debt are the wrong path. And the U.S., given its role as the world's reserve currency, has a responsibility to the rest of the world to maintain the dollar as a sound unit of account. And the U.S. government has hopelessly failed in that responsibility. So it's not surprising to me to see other countries around the world taking steps for a post-dollar world reserve currency situation. In other words, you see China building up trade relationships with various partners, trading partners, where goods and services are paid in terms of yuan, the Chinese currency. You see Germany pulling gold out of the United States. These are types of things that confidence in the U.S. government is eroding, and the concern here is that it could erode very, very quickly, given the fiasco that's going on in Washington right now. I think that the debt limit is extremely important. It's the last form of discipline that we have in terms of controlling government spending. But at the end of the day, I think the politicians are going to increase the limit. And when they do, it's going to open another tidal wave of money printing by the Federal Reserve.
So the money printing will just continue.
Yep, that's the way it's good. It's the way it's going to go. It's going to take someone, with the vision and a political leader to turn the ship of state around. I think Ron Paul could have done that, but unfortunately, he did not get elected as president. And as a consequence, we continue to move, or the country continues to move, in the wrong direction.
Do you think people, like the American general public, do you think they're ready for a change, or do you think there's too many people reliant on the system now to even do a change now? Like I said earlier, it seems like we're too far down the rabbit hole. It seems like it's just going to go on until it can't go on anymore. Yeah,
that's really a good question. If you look at the numbers, I just saw something, 57% of the American population in some way is dependent on some level of government, be it federal, local, or state government. So you've already got more than half the people who are tax eaters, and only 43% of the people who are taxpayers. Obviously that situation is not sustainable. It could go on longer, but ultimately, you're going to destroy economic activity. The underlying reality of this is that the government doesn't create wealth. I mean, they can pump up the GDP numbers by borrowing and spending money, but it doesn't create wealth. Wealth is created by the private sector. All the government does is take wealth away and redistribute it. And if you end up taking too much wealth, if you end up pulling out too many feathers from the goose is going to start squawking, and ultimately the economy is going to collapse. And I think we're really seeing that now. The economy has been declining slowly, but, we're in if not a depression, a very, very severe recession, and basically have been since the collapse in 2008. And the reason why I say that is that if you look at the median income of the average American, adjusted for a true rate of inflation, he's no better off now than he was 10 years ago. In fact, he's worse off now than he was 10 years ago. So until you get median family income adjusted for inflation higher than it was prior to the collapse in 2008, you can't say that the economy is doing well. It's doing poorly and is likely to continue doing even worse, given the fact that the government is really just taking, and there's only so much that the private economy has to give before the private economy collapses.
I agree. Eventually, they're just going to suck the private economy dry. It seems like that's their long-term plan.
Nathan, There's a great book out that's available for free on the internet that can be downloaded called Fiat Money, Inflation in France. It was written at around 1900 or so by the president of Cornell University. Andrew Dixon White is the guy's name. And what it does is it looks at what happened during the time of the French Revolution and the problems with the French economy and the bad currency that they had at the time. And in many, many respects, there are a lot of similarities between what's happening not just in the United States, but worldwide today, and what happened in France back in the time of the assignats and the other currencies that ultimately were destroyed.
I have read that book, and it's an excellent read. I recommend everybody read it. And it definitely seems like history is due to repeat itself again.
Yeah, it's unfortunate. There's a Spanish-American philosopher by the name of George Santayana, who said if you ignore history, you're doomed to relive it. And it looks like we're reliving history.
Agreed. James, experts have been calling for a move higher in gold and silver for quite some time. In my personal opinion, they have moved higher. It just depends on when you got into the precious metals. What words of encouragement can you give newcomers to the market? Will prices be moving higher? Is the bull market in precious metals over, as the mainstream media would have everyone believe?
Well, first of all, we've been here before. I remember when gold had got up to $500 and then it fell back down to $400. People were saying, bull market is over. Should I be selling? What you should be looking at here is not price, but value. There's a difference between the two. People make their decisions on price, but you really should be making a decision, and this is true for all portfolio management decisions, whether an asset is undervalued or overvalued. The key to successful portfolio management is to accumulate undervalued assets and to sell overvalued assets. So what you really should be looking at is the long-term swing of things, the big picture. Look at the forest rather than the trees. And when you're doing that, focus on value. So gold here is still very undervalued. The other thing too is that, portfolio management is very much a personal decision. Everybody approaches it in very different ways because everybody's subjective judgment is different. But the bottom line is that you have to do what you need to do to sleep well at night. And in my mind, the best way to sleep well at night with all of this uncertainty going on in the world is to have some physical gold and physical silver tucked away, because they are your go-to asset in the case of a monetary collapse or other problems. And history has shown that monetary collapses are a reality when you go in the wrong direction. You can't predict when you're going to go over the cliff, but you know that if you're heading toward the cliff, sooner or later you're going to go over it.
It's better to be prepared than to risk losing everything, basically.
Absolutely. And diversification is a key way to do that. Diversifying in as many ways as possible and practical.
It truly is it's a unique feeling the first time you hold precious metals in your hand, and then you hold a paper bill in your hand, and you really can. It seems like you just know the difference.
Yeah, it's intuitive almost. I remember the first time I held a Cougarin in my hand back in the 1970s. It's a moment I'll never forget. Gold is really something special, as is silver. A silver dollar is an absolutely beautiful coin. And when you pop it down on a countertop, it's real money compared to, some of the base metals that are now being used today for transactions.
James, what do you think is the end game? How do you see this grand experiment in fiat currencies ending? Where do you see the price of both gold and silver heading for the remainder of this year? Where do you see the price going in the long term? Well,
I've been in this bull market for a long time. I was interviewed back in Barron's, back in 2003. And back then I laid out a time frame that between 2013 and 2015, gold was going to be $8,000 an ounce. And, you're going to see a lot of problems with the dollar and the banking system. Over that 10-year period of time, a lot has happened already. We had the blow up in 2008, which, may have been the end game then, but they managed to buy time by creating trillions of dollars of new debt, saddling taxpayers with the bailout of the banking system. But, the experiment with fiat currencies, is going to end like all experiment with fiat currencies. The currency will collapse. There's never been a fiat currency that survived. And the reason is that human nature never changes. The nature of politicians and politics never changes. And when you create a fiat currency and put it in the hands of politicians, they spend and spend and spend until the currency is destroyed. And it's not going to be any different this time around. As Einstein has said, it's stupidity is to keep doing a same experiment and expect a different outcome. It's not going to, it does take a rocket scientist to determine that, if you have a fiat currency, it's going to end up any differently than any fiat currency throughout history. So the end game, in my view, is that fiat currencies are going to continue to erode until eventually they collapse. And this 40-year experiment that we've been following, 40 years of having money backed by nothing except promises instead of gold or silver, it's going to end whenever it ends, whether it's later this year or next year or in 5 years' time. It's going to end like all other experiments with fiat currency have ended: a total collapse of fiat currency and the return to gold, return to silver, the return to sound money and sound money principles. And so in the long run, the price of gold is going to go much, much higher in terms of national currencies, for the simple reason that the currencies are going to have less and less purchasing power. Whether the ultimate price is $5,000 an ounce, $8,000 an ounce, or higher, only time will tell. But I use two mathematical formulas to try to ascribe a value to gold based on historical precedent. And both of those are saying that at around $11,000 to $12,000 an ounce, gold would be fair value. And the fact that we're so low relative to that fair value, and the fact that we've remained low for such a long period of time, just shows that this is yet another bubble that's going to pop. This fiat currency bubble is going to pop. You can't predict when it's going to happen, but if we use monetary history as our guide, it is going to pop eventually. And everybody has to prepare for that outcome. And the best way to do that is to own tangible assets of all sorts. If the financial system collapses, farmland is still going to produce food. Oil wells are still going to produce oil. Mines are still going to produce metals, and gold and silver will still be gold and silver. So until this experiment with fiat currencies ends, focus on owning tangible assets or near tangibles, which would be equities, for example, in companies that are involved in tangible assets, like mining companies and oil companies or agricultural companies, and avoid financial assets, which are anything denominated in terms of currencies, regardless whether it's bank deposits, annuities, insurance contracts, or anything of that nature, because those, history tells us, will be destroyed when fiat currencies finally collapse.
I completely agree, James. People should just continue to focus on the big picture, accumulate real wealth. That's throughout history. That's always what's remained and kept its value. And
there's one thing, Nathan, that I just want to add to this that's sort of important. What I've been recommending since I started Gold Money back in 2001 is that you accumulate gold and silver on a cost averaging basis. In other words, if you want to put in $500 every month of savings or $50 a month of savings, whatever the number is, on a certain day of the month, you buy that $500 or $50 of gold or silver, and you just do that month after month after month on a consistent basis, and view that accumulation of precious metals to be your savings. It doesn't make sense to save any national currency anymore because you don't get the interest income to offset the risks. But savings are important for everybody in order to plan and prepare for a future which is uncertain and a future which no one can predict. But we know that we're heading on the wrong road. We know that we're heading toward the cliff. So you have to be prepared for contingencies that might arise. And the best way to do that is to go to assets that are proven and time-tested. And the proven and time-tested assets throughout monetary history are gold and silver.
I couldn't agree more with that. It takes the stress completely out of it. Just dollar cost average. Don't worry about the price. Count in ounces, and you'll be good to go when it comes the time for your retirement. In conclusion, James, can you please tell our listeners more about Gold Money and any other services that you would offer?
Yeah, we're at goldmoney.com. We are safeguarding for our customers about $1.7 billion of precious metals. And we offer storage in vaults in Canada, the UK, Switzerland, Hong Kong, and Singapore. So regardless of where you're living in the world, you have an opportunity to buy and store precious metals in a different part of the world from where you live, a different geographical location, and different political systems, which again is key because it gives you that opportunity for diversification.
James, thanks for joining Sprott Money today, and we hope to have you back again in the future.
Thank you, Nathan. I'd like to do that.
Thank you very much.